Hello and welcome to this video on business planning. In this video we're going to look at what a business plan is, the typical sections a business plan has, and the pros and cons of doing a business plan. Let's start off with what a business plan is. And a business plan is a physical document that describes how an entrepreneur proposes to set up a new business. And normally this includes the nature of the product or service, the objectives the business has, how the different areas of the business will function, and some forecasts for the financial performance. So let's talk about the typical contents of a business plan. There are 10 key sections that a business or an entrepreneur setting up a business would normally consider putting in their plan. First of all, an executive summary. This is normally a brief description of the business and highlighting 2 or 3 of the key points or the key selling points of the business. Secondly, what exactly is the business model and a description in more detail of how the business or what the business is. Thirdly, some detailed information about the product and where it's positioned within that market. Fourthly, the management team and the key personnel, either the people they require or the people they already have, and their key strengths. A market assessment. How many competitors are there? What is the market structure? What is the market size? Is it growing? Sixth, a marketing strategy. How are they going to get their products to their customers and make their customers aware that they exist? 7, an operation strategy. How are the products going to be made? 8, financial forecast, normally including cash flows and also some scenarios of what might happen in the future. Key opportunities and threats. And then lastly, how much money investment is required if it's a new business or the plan is being used to source new finance. So that's what a business plan is and the typical sections. What is the purpose of a business plan? Well, often a business plan is used to secure external sources of finance, so from banks, potential partners, venture capitalists, business angels. To ensure the firm develops a healthy financial structure, to help identify problems the business might face, so the business planning process can identify those. Fourthly, it can be used to set targets and then check that the firm is ticking off those targets as it develops over time. And then lastly, to provide expectations of what can be achieved, real clear goals for the business, typically that are SMART, so specific, measurable, achievable, realistic, and time-based. Business plans are very important for raising finance. A business plan kind of acts as a sales document or a brochure for the business, telling potential investors or lenders how and why the business will succeed. This is particularly important because if the business succeeds, this is how it will be able to repay loans or reward equity investors through paying dividends. So the plan often provides detailed financial forecasts, including cash flow forecasts, statement of comprehensive income, budgets, and any other forecast financial documents that might be relevant, such as the amount of investment they're looking to raise. A cash flow forecast is particularly important. It's often referred to in business that cash is king, because cash is what is important for the business to survive and also provides the repayment for debts and the return for equity investors. And cash flow is unpredictable part of life for most businesses, and the major reason why most businesses fail is because they run out of cash. So having a reliable cash flow forecast in a plan that is updated regularly can solve many of those problems. If it's out of date, if it's not regularly updated, then its usefulness decreases. Even worse, if it's particularly out of date, the business might be making decisions based on a forecast that is totally unrealistic and may cause them to make mistakes. Okay, are there any downsides to introducing a business or doing a business plan? Well, here are some quotes suggesting some arguments against doing a business plan. Most investors don't want to invest in a plan, they want to invest in a business. So rather than planning, actually start up the business and get it running. A plan, whilst it's useful, can never account for everything, so maybe it's not worthwhile doing a document that instantly becomes out of date. Most businesses fail because of lack of capital and lack of entrepreneurial expertise, so it might be better to just focus on those two areas rather than doing lots of detailed planning. Writing a plan might not help you. If you're looking to gain experience, better off time just working on the business rather than writing a plan. Having said all that, the vast majority of people would suggest that doing a business plan is an excellent idea for the reasons outlined previously. So in this video, we've looked at what a business plan is, the typical sections a business plan would contain, and some of the pros and cons of doing a business plan. That's it. We've come to the end of the line.